This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Well, hello and welcome back, of course, to the Research Talks podcast here from Stockbox with Alan Green. Alan, again, how are you doing? We seem to speak every week, don't we?
We do speak every week, Mark. Yes, I'm very good, thanks. How are you?
Yeah, very good, thank you, Alan. Yeah, very good, very good. Not much to report on the week, really. I mean, we had a good week, Alan. Have you seen any sort of significant movers on the market? It sort of seems fairly subdued from my point of view anyway.
It's been fairly subdued, but we've seen some good news out from Sovereign Metals this week. Of course, developments from Marula too, which we're going to discuss shortly, and of course also Guardian Metal really progressing. It's some great news coming out of the Oliver Friesen camp. Yeah, it's really exciting, and I think it's this. You just sense that with the pace of activity here and the rate at which things are happening, that this is a company that is in real growth mode. And it's a company that is very exciting to be involved in. Obviously, market cap 35-40 million, but if everything gets over the line, we're looking at many multiples of that. So and because it's already happened and it's already been realized, the milestones have been hit, the benchmarks have been achieved, the sky really is the limit. It's a really exciting stock to be in.
Oh, absolutely. Yeah. And like I said, I think there's a lot more to come through the ongoing drilling program and constant assay results coming through, lab results coming through from the 21 holes that have been completed. So I'm sure Oliver and Guardian team will be keeping us entertained throughout the course of Q4. So we're not going to cover Guardian today, but I'm sure we will at some point in the future. But I mean, you are right. Yeah, there has been some decent bits of news. I still see some pretty, heavily discounted placings coming out. I think there's still definitely a lack of money, but as we said before, the smart money is indeed positioning. We've talked about that before. For compelling projects, there is money available, but it's really having to meet some sort of high criteria. Of course, GGP as well doing sort of taking back ownership of the project there of Valereum from Newmont. So I haven't read into that in much detail, but I understand they just they want to go back to fully owning it 100%.
It was interesting. I picked up a comment from Paul Johnson on social media the other day about the ramifications that could have, of course, of First Development Resources that has assets in the area too. And but I think it's great that that Sean Day and the team had taken it back, and they can now develop the asset and work it as they wish. And it's. But it has, as I say, ramifications for other explorers in the area, because that is an asset that just keeps on giving, isn't it?
Yeah, exactly. Was it Newmont that wanted to sort of divest a little bit? Was that thing was it non-core to them or something?
I think so. Yeah, and I think this is the challenge that so many of the mining giants have. Of course, they're under pressure to deliver growth, so of course they have to be invested into projects that they can get into at a certain level and then get out of at another level, and that's how they do it. And we've seen, well, as examples, of course, Rio Tinto investing into Sovereign Metals.
Exactly.
But I think the rate that's progressing, I think Rio are there for the long term. But for Newmont, Valereum perhaps was a bridge too far, and they saw an opportunity where they believe they can get a quicker return, and that's of course what the investment committees within these huge mining companies are all about. They're under pressure to deliver results. So Valereum perhaps wasn't realizing its value as quickly as they had hoped when they initially got involved.
Yeah, indeed, but there's no doubt what is there, the value in the ground, and if they've got that placing away there, $325 million US. I mean, that's a lot of money to raise. So for compelling projects, there is money available. But yeah, for perhaps the juniors who are early stage or have not really sort of communicated the message correctly. I don't know. We're seeing quite a lot of heavily discounted placings, aren't we? And a lot of them are sitting around that kind of 2 to, I don't know, maybe 6-8 million pound market cap. Really they are on the ground. So I think with smart money positioning, certainly in some of the smaller juniors as well, we are probably around about seeing the bottom in this sector. When you start seeing big discounted placings or even IPOs struggling to get away, like FDR, for example, again, due to sort of lack of appetite, lack of money sloshing around, it does signal, I think, that the bottom is fairly near. So hopefully that is indeed the case. But anyway, we should crack on and talk about the 3 companies we're going to cover today. So first of all, Marula Mining, again, don't need any money, do they? Don't need any placings. They're going to be fully backed by AUO. So they don't have to worry about raising money. And all the projects they've got, well, you can tell us all about them, Alan.
Well, they certainly have amassed a really broad and diverse portfolio of assets. And of course, Marula started out, it was all about the Blesberg lithium and tantalum mine. I think it's fair to say it's still probably the flagship asset. But of course, over the past year, it's just acquired additional projects, backed, as you say, by AUO, Quinton Vandenberg, of course, his investment vehicle, and this strategic partnership that they have to invest into new mining opportunities, processing equipment, also, to really fast track these projects and mines and get them moving. So Marula are currently listed on the Aquis exchange. They're also listed on South Africa's A2X exchange, and they're currently looking to, at some stage, move to a London main market listing and also the Nairobi Stock Exchange as well. But that's all in the future, and those are being progressed. But currently, Marula are operating in 4 countries in Africa. South Africa, obviously the Blesberg lithium and tantalum mine, and also the Corridor lithium project, which is adjacent to there. There are 2 other projects there: the Northern Cape lithium and tungsten project, which is owned outright by the group also, and the Cruise River Cobalt project, which is a 51% investment at this point. In Tanzania, the company has a 75% stake in the Kanusi copper mine. It also has a 75% stake in the Nyurunori graphite project and the Nyori green graphite project, and also the Bagamoyo graphite project. The company has a 73% stake in that asset. So that's 4 key projects in Tanzania. In Kenya, where a lot of the recent news flow has come from, the company, of course, has acquired a 60% stake in the Larisoso manganese mine, and also has more recently acquired an 80% stake in the Kilifi manganese processing plant, around which there's also some assets in the ground that the company are working on. And then in Zambia, of course, we have the Conway Hill, that's the rare earths, the rare earths asset, which the company also has a stake in. I mentioned, of course, the backing of Quinton Vandenberg, and that of course means that Marula don't need to go to market because they can fund the project acquisitions and the developments that they make. But it's been a pretty busy few months for the team. Of course, Jason Brewer, the chief executive, he's very much the driving force behind Marula, and it's his pace of work that's really that's really seen the company grow. And indeed, for investors over the past year, it was one of the best performing stocks on the Aquis exchange. We've seen the shares trading at a high of 13.75p, a low of 7.1p, and of course that's where it's at now. And the reason for that fall was a delay in publishing full year accounts, and of course those have just come back. Those have just been released now. The final results have just been released, and probably the delay was on account of the immense amount of assets the company has acquired over the year. And of course, we've seen that six-fold increase in market cap from coming to market, or from the start of the year, from just under 4 million to up to 22 million. And it has resulted in increased losses after tax compared to the previous year, but that's given the amount of assets the company now has in its portfolio. That doesn't surprise me one bit. But since May, things have really started to move. So the company announced in May an offtake agreement with UK community group or a commodity group, Fujax, to take an initial 2,000 tons per month of manganese ore from the Lerisoso manganese mine. That's rising to 5,000 tons per month. And then in June, the manganese operation developed further. They signed a logistics and export and logistics agreement with Scan Global Logistics, the Kenyan subsidiary, to transport and export manganese ore. Delivery of that started at the end of June. And then a lot of activity in August. An additional ore supply agreement for the Kilifi plant to supply 10,000 tons per month of manganese ore, and this was organised along with a company called Kitman Holdings, and this is probably fairly unusual in Africa. It's a company that's run by women completely, and Jason is I know very keen on promoting females into senior management positions, and he was very keen to work with this company. That also continued in August. Further supply agreements with Kitman from the Kilifi plant, and then onto the core asset, the Blesberg lithium and tantalum mine. Of course, the mine has a huge stockpile of spodumene, and there are other assets still in the ground that the company's going to take out. But the most important development for Blesberg is the sorting of an ore machine, or a machine that actually sorts through the ore and sorts it into transport ready stockpiles. And indeed, there's an agreement with a company called Tomra. It's a shares and cash agreement where the company are recommissioning a plant, and they're transporting the plant to Blesberg. That has now been done, and the final commissioning process is underway, and it will be up and running very shortly. In regard to the further developments at the manganese mine, there are a number of additional sale and purchase agreements that have been agreed throughout August and into September. In addition to that, the company, as part of the agreement, agreed to undertake geological work at Kilifi, and indeed the assays that the company has from there, in addition to the existing deposits at Kilifi, which extend up to 30 kilometers along strike, the company has identified an additional high-grade zones 5 meters and below these existing deposits. And the assays from this new zone range between 44% and 71% manganese, which is a huge development, because it gives the company, it now provides the company with the potential to produce a new dedicated manganese product, and at the very least to upgrade the existing ore average and of course quality as well, and that of course in turn will lead to higher prices, higher sale prices in the market, equals greater profitability, and so on. So very significant developments from there. Also, we just heard a day or so ago about the geophysics survey at Lerisoso. Again, the Lerisoso asset, the current strike extent is 2.5 kilometers to the south of the existing open pit works, and part of the investment plan, in addition of this 1.75 million investment plan, which is in addition to the money that's already been supplied for new mining and crushing equipment, is going into fast tracking the assay results and the sampling results from Larisoso. So we're going to see results from that survey in the coming months. Also, we just heard from the company too. The first manganese export sales have been completed with GIM Kenya. That's from Narasoso, where the company exported through the Scan Logistics Agreement 476 tons at 37% manganese. And from that, Marula will receive 60% of the net proceeds. So all of this investment that's gone into the projects, this is really quite a milestone, because the first manganese payment will be with the company shortly, and of course 60% from those net proceeds will be rolling into Marula's accounts probably every month from here on in. So that's transformational for the company. We've seen the share price, as I say, during the suspension while we waited for the full year results. We've seen the shares suspended at 7.3p. The shares popped up yesterday briefly on the news, currently at 7.3p, giving the company a market cap of just 15.6 million. So in terms of these developments, the fact that the company is turning into a cash generating machine now, as opposed to making those investments, this looks very good value at current levels. And I think it's not unreasonable to expect that once the company starts to regularly generate cash, we're going to start to see that share price return to those highs that we've seen during the year of 13 to 14 pence.
Good. Well, thank you, Alan. That's a good summary there of Marula. A lot to cover. Remember those days we used to talk a lot about power metal resources. There's a lot to cover there. I think Jason and Marula, similar kind of style there, with lots of different projects going on. But as you say, it's great to have the backing of Quinton there. I think it's only a matter of a little bit more time now before those funds are all fully unlocked. Above the funds that have already been drawn down by Marula, and then you're really going to see that whole group, including Shuka and Neo, I think, really go for it. All guns blazing, so to speak. So yeah, looking forward to it. I think it could be really quite an exciting story emerging out of Africa there, and Quinton's sort of profile building. So thank you, Alan. So Kavango Resources, if we can talk about Kavango, who we haven't covered for a little while, but again, shift of focus there. They've still got their other projects, but really Zimbabwe is the focus there. And near-term gold production. I mean, talking about building a 100-ton-a-day plant, trying to mine about sort of 8 grams a ton. 8 grams of gold per month to get into generating cash flow. Yeah.
Well, they're very much on course to do that, and you have to say, what a transformation for Kavango under the stewardship of Ben Turney. He really has pivoted the company, put the company into assets where we have this near-term potential for production, and this is, as we've said so many times before, Mark, this is the imperative now for mining companies, is to get to a stage where they are generating cash from selling the product that they pull out of the ground. And we've seen other companies move towards this. Of course, we spoke about Marula just now. They've just reached that point with the manganese, and Kavango are pretty well at that point now. And that's from a point where they were just an exploration company probably a year or so ago. So Kavango currently shares currently trading just over a penny. We've seen them as high as 1.7p on the year, as low as half a p. So somewhere between the two at the moment. But of course, the focus is, as you rightly say, Mark, Zimbabwe. But we also have assets in Botswana. We have, of course, the KSZ, which is the Kalahari Zone, where we heard a lot about this enormous Norilsk-style deposit or anomaly in the ground there. And then we have the Kalahari Copperbelt assets, and the company has some highly significant assets there. We have the Karakubis license, and that's the team are working there to develop and pull these assets into into a resource, and of course these assets are not a million miles away from the Sandfire Mateo mine asset, and there are other operating mines close by too. But it is Zimbabwe, and of course Zimbabwe, the focus is on the Hillside and Leopard projects, and of course the Nara gold project, and these are assets which are have a lot of artisanal work, should we say, that's been taking place there over the years. With these assets, the company has taken a great deal of time, and also backed by its major shareholder Pure Bond, invested an awful lot of money into really carefully defining the resource and really going to an awful lot of detail in regard to drilling and ascertaining the size of the asset based on what's there, and then also following strike along to see how far the assets go. And we've had a raft of results come in over June, August, and September, which I'm going to take you through now. Also worth noting in June that non-exec director Peter Winterby also acquired some shares as well in the company, which is always good to see the board backing the asset. So in June, of course, just going back to the Kalahari Copper Belt, the company started drilling there, identified 15 high priority targets where drilling's undertaken across some 5,000 meters of drilling, and again results from that set to come back very, very shortly. It also commenced drilling at the Hillside project in Zimbabwe. So with 3 prospects there. We had prospects 2, 3, and 4, with in April, of course, prospect 2 yielded some very strong grades, 7.2 meters at 9.95 grams per ton gold, and also an even higher grade where the company identified 1.6 meters at 31.5 grams per ton gold. And of course, the point of the drilling was to follow up to test the strike extent that had already been mapped from the surface there. So we then follow on from there. The company in August announced a further 3 diamond holes have been drilled at Hillside Prospect 2, and that's following on from that from that result from April. So we are sort of now awaiting the results from Prospect 2, so the team can ascertain the extent of the and the size of the asset. Also in August, at the start of August, the company announced that it was looking to complete a secondary listing on the VFEX, the Victoria Falls Exchange in Zimbabwe, and to that end, it also appointed a gentleman by the name of Tom Mapufu as chairman of Kavango Zimbabwe. Mr. Mapufu has quite a CV. He has been involved in ZB Financial Holdings. He's a non-exec director at Rio Zim Limited, also the president of the Royal Harare Golf Club too, which I'm sure will be of interest to some people. So we also had a raft of assays back from the assets in Zimbabwe. So from the Nara Gold project, the company announced a bunch of assays, and the assays confirmed a gold mineralized system. 6 holes there had been drilled, and 5 of those holes intersected mineralization, and also noted higher grade assays at depth. So again, Nara proving up to be an asset with an awful lot of potential. Then back to the Hillside project again. The company announced progress at Prospect 4 at Hillside, where it identified extensive anomalous gold in samples over 1.5 kilometers. the company took a total of 582 samples and reported quote unquote gold across the entire area, but also with that 1.5 kilometre area, the strike remained open to the east and the west. Some examples of grades from there were 2.5 meters at 29 grams per ton gold, and a peak grade of 212 grams per ton gold over 0.34 meters. So gold's also worth noting there that the gold was noted very much from the surface downwards. So potential for a pit mining there also. In Kavango and Ben also reported on the capex and financing situation, and of course they have the shareholding and backing of Pure Bond, which are a group of investors here in the UK, and the company issued a 2 million convertible note to Pure Bond, and this will be followed by a series of staged capital investments, which will be convertible loan notes, no doubt, from Pure Bond as the projects develop and go forward. But Ben structured this in a very good way indeed. I think it's not immediately impacting on existing shareholders, but when the money or when the loan is converted into shares, if indeed it is, if it isn't paid back, then of course the upside will already be there, because the asset will have advanced to the stage where it will have accrued additional value. So that's very important to note. Then, of course, most recently, we still with the Hillside project in September this month, we had further positive assay results from hole number 2, and this is some 200 meters long from the first hole that was drilled there. Here, the company noted extensive mineralization, some 20 meters noted with an average of 0.5 grams per ton. And again, as with the others, the mineralization starts from surface, could well be pit mineable. So that obviously is a much cheaper way, rather than having to sort of drill down and put a shaft in and all the rest of it. And also hole 3, the results came through from there, and we had again some good grades, 8.2 meters at 2.9 grams per ton. That's a big old chunk of mineralization, and some 0.35 meters at 13.8 grams per ton. Ben and Kavango, I think, sort of made quite a defining statement there, where he said, the company's taken a step closer to defining the first bulk mineable target. And as we mentioned at the start, Mark, that the sort of production numbers the company believes it will be able to now produce based on all of the work that they're doing. Once all of the assay results come back in and the additional work is undertaken, Kavango, I think, look in very good shape indeed. And again, as with Marula, backed by Quinton and AOU, Kavango are very much backed by Pure Bond. They have that resource to go to, and they're backed by a cornerstone shareholder, and that makes all the difference in this marketplace. And I think we're going to see Kavango shares certainly start to push back up high from this level as these projects and certainly the mines at Hillside start to come on stream.
Good. Well, again, thank you, Alan. And yes, I agree. Again, they've got good backing, haven't they, by Pure Bond there, which is always great. Like you say, like Marula as well, to have that backing from external funding. So Ben coming out very bullish on Zimbabwe, seeming to be the focus. I know we're planning to do a bit of a live sort of feature on the company as a whole, and cover every project and really what the strategy that Kavango are going to follow, and that will be open to people to join, to watch. We're doing that live. I think it'll be early next week, possibly on Monday, and people can come and ask questions to Ben directly. But it seems very much like you say, the focus is going to be on getting that cash flow in from Zimbabwe. mitigating the need even further to have any kind of concerns for cash, go to the market for cash. And they can progress the more exploratory side of the business. But thank you, Alan. So let's finish off with a tech company, Valereum Blockchain. So I don't know if we've spoken about Valereum before. So from mining to a different kind of mining, tech mining. But they're into it's not mining Bitcoin, is it? It's different. It's projects within the blockchain space.
It is, and we did speak about Valereum before, Mark. That was earlier this year, but yeah, a lot has happened since then. I think the company is really starting to unlock value, and indeed, the company's mantra is to unlock capital and create value in the tokenized digital market space, and its mission statement is to transform global finance in a far-reaching and impactful way. So it's the company's creating a digital financial market infrastructure platform as an exchange and marketplace operator, which the company is calling the bridge. So it's the bridge between, I suppose, conventional financial markets and the tokenized marketplace. And we've heard an awful lot about this this year on so many levels. Tokenization is very much the way forward. And indeed, for Valereum themselves, Valereum had their own gate token, and this will be the fuel that drives their network, and it'll be used in the Valereum ecosystem. So the company will take the gate tokens in fees. It'll use the gate token for staking, burning, and governments. And it will also underpin the fee settlement process as digital assets and securities are adopted worldwide. So the three primary sectors to the group. There's Valereum Markets, or VLRM Markets, which uses the bridge tech platform to establish a licensed and regulated stock exchange, and from here it can issue and trade tokenized securities and digital assets. Also opens up the real world asset market, or RWA markets, and it in this regard will be a primary issuer and also offer a secondary market for trading in those assets. And then, of course, the actual technology platform itself. So Valereum Technology will provide a full stack technology solution for capital markets to support both primary and secondary trading in public and private markets, using the bridge platform, of course, to underpin and cornerstone all this. And then Valereum has its own investment vehicle, VLRM Capital. That's the investment vehicles that manages its own funds and also third-party capital. Its growth strategy will be based on principal trading securities and crypto, and also yield farming and node operations for third-party blockchains. A word about the board. Chairman James Fomoli is a hugely influential gentleman. He's has interest in aviation, property, and investment. Of course, Chief Executive Nick Cowan, former GSX Group Chief Executive and founder of Gibraltar Stock Exchange. Simon Brickles, of course. Simon has been around for many years. He was involved with AIM, LSE, and as GSX chairman. And it's been a year of transformation and evolution for the company. The company announced in May for a partnership with Securities Trading and Technology Mauritius, STT, to jointly develop the Bridge Digital FMI, or the Financial Market Infrastructure platform. At that same time, it also raised a further 2 million, and this was a single investment from Chairman James Fomoli at 0.36p. And I think when you've got backing from a member of the board in that way, then that's very reassuring indeed. So so Mark, you there? Yeah, sorry. Yeah, I could just hear someone else on the line. It's okay. It's gone now. Okay, so Yeah. Okay. So So also in May, the company raised 2 million from the chairman, James Famoli, at 0.36p. And of course, shares are now trading at 0.7p. So James has basically doubled his 2 million to 4 million. But it's great to have backing like that from a board member. And of course, James is hugely confident in the future of the Valereum business as an entire entity. It also announced in June set of full year results where it reduced its losses from 4.3 million for the last year to just 300,000. And this was due to a gain in the holding that it had in Venance. Of course, we spoke about Venance last week as well. And the group assets increased to 2.4 million from 1.2 million previously. So that was a very timely holding an investment for the company in Venance. Progressed through the summer, the company announced a collaboration with Antia to develop the V-Wallet for mobiles, which is going to be a key part of Valereum's go-to-market strategy. It also announced a collaboration with Tokeny to provide the technology to develop a real-world asset marketplace. Of course, that'll be tokenizing of funds, private companies, property, and other assets such as art. And the company also announced the launch of Fireblocks enterprise technology as a key part of that real-world asset infrastructure. So it's been a year of building, getting the infrastructure in place, getting the platform ready to go. And then the first step into the commercial sector, if you like, in September, the company announced that El Salvador had issued Valereum with a DASP, or Digital Asset Service Provider license, so it can provide both its real-world asset platforms and the V-Wallet and the Valereum Markets Pro, which is a bespoke service for professional customers into El Salvador. And of course, we've some South American countries are very, very pro crypto and working with that. But this is it'll be a very good test, I think, for Valereum to get their products into a real world marketplace and it'll be a very strong test bed for the company to test, fine tune, tweak as needed before it rolls out into the larger world. But I mean, the market's really liking these developments, and certainly that announcement, the rollout into El Salvador, was very well received. As I say, the share price jumped up from just over 3p up to 7p, where it's currently trading. We're just off a year high of 9.45p. But I think at these levels, with a market capitalization of just 12 million for all of that investment and all of that technology, makes this company one to watch for the future.
Well, thank you very much, Alan. Thank you very much for covering all those different companies there. Lots of food for thought over the weekend here. I think we'll see what the US elections bring. Of course, Trump being very, very supportive, bullish on crypto and Bitcoin. So if he does indeed get in, I think that sector could certainly see pretty much another kind of go at the rally, at the boom time. If it's Harris, then I think it'll still happen. Maybe just not as maybe it'll be slower rather than quicker. But either way, I think all of the Bitcoin and crypto blockchain space is certainly still very much in its infancy, and still very much finding its feet. So the story is definitely not dead yet. Thank you very much, Alan, for your time. Have a pleasant weekend.
Thank you, Mark. Have a great weekend.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.